Hello, everyone.
Evening.
Keep you, get you here in the middle.
Only the quality remains in the room. We got rid of the masses.
No, this is really for the insiders here. But we have, thousands of people online, so be careful what you say.
Oh.
Yeah.
Oh, yeah.
Okay.
I forgot we're in the metaverse.
Oh, we're in the metaverse, are we?
Yeah.
Yeah, and it's funny.
You look like an avatar already. So.
Hyperverse. Yeah. Okay.
I'm not really sure how you're going to keep these two gentlemen under control, but let me try for the next 30 minutes at least. And the funny thing is we had this talk, a similar talk already in May, right, for the pre-event. And we'll see, I think since then, quite a few things have evolved. So I'll give you another chance, actually, to give me a very new, bold statement about the power of tokenization.
You go first.
I think what we're about to see is a real transition where the technology that we've seen powering cryptocurrencies, powering the NFT boom, powering the DeFi ecosystem in the context of crypto assets, is now going to be applied to hundreds of trillions of dollars worth of real assets in a way that will make existing markets that we've already seen look like little more than the oil that's going to run the machines in the context of crypto. But all of that learning and all of that excitement, all of that kind of flexibility, liquidity, trading, and the ability to represent interesting and new bundles of rights in tokenized form is going to now be applied to everything in the world. Now that is going to be a very interesting place. And once we start, as we're seeing, tokenizing those assets, getting them into digital format, then what can happen with those assets and the world will create, whether it's DeFi solutions associated with security tokens or asset-backed tokens, whether it's lending protocols, other things that we've seen happening with a crypto, and now we're applying these new financial models to it. Once we have a crypto that's somehow linked to something like a piece of real estate, the same things can happen. Now that's going to be very, very interesting.
Brilliant, yes. We're not only talking about the evolution from Web 2 to Web 3, but you're saying we'll bring now the physical world into the digital world. That's pretty bold. Jeff, can you beat that?
So I'm going to take a little bit of what he said and probably make it a little bit better. So this actually might be a little bit controversial to many of the native Web3 discussions we've had today. Look, I've been thinking about what I said last time. I said everything's going to be digital. I think what I want to say this time is over the last, I'd say 6 months or so, of actually thinking about how corporates are actually getting into the metaverse. I really do truly believe that value being created in the next year by corporates will eclipse whatever the retail space is actually generating on the metaverse. Mainly for one reason. If you look back in history, specifically, computers came into the household and then people were doing work and became very productive, but then also started playing video games on top of it. In this case, video games came first in the metaverse, in this iteration of the metaverse, but the companies are still waiting to figure out how to actually be productive on it. So once that actually flips, I think you'll see a lot more assets, a lot more institutional industrial use cases, and it really being applied to the metaverse, and everybody will be on the metaverse properly. So that's my bold statement.
Brilliant, love it. So we'll continue with that conversation, but before I want to give the people here in the audience a bit of a background, because actually, Scott, I know you from your times at DLA Piper, so you're a lawyer turned entrepreneur. I've always been an entrepreneur, maybe at heart, and now so you are the entrepreneur in residence of TOKO, which is really the enterprise-grade tokenization engine for digital assets and managing that on a platform, right?
That's right, yeah. So my background is a tech lawyer, 25 years as a lawyer. It took me a long time to work out that wasn't actually my natural home. I've been looking for a legal tech solution to design and build. TOKO started about 4 years ago, and that's what it is. So now I find myself kind of leading the TOKO business. We still work very, very closely. We heard from Christy and Alice and the DLA team earlier. When we talk about tokenization of assets, real world assets, this is an enormously complex legal and regulatory world. It's one thing to do a JPEG of a piece of digital art, typically unregulated, an NFT, Actually, it's not complex, but as you know, as soon as you move into it's asset linked, it's fractionalized, you're now caught up in securities regulations, collective investment scheme regulations, and every single country in the world has a different set of laws just to make life even more interesting. So it's this complex combination of market-leading technology plus global legal, capability to ensure that these projects can be done in a compliant way, and that's the real sweet spot of what we've created with TOKO.
Brilliant. And actually BCW Consulting is the partner in that project. And I know, Jeff, that you actually consulted the Fortune 500 companies already before that in different technologies, right? AI and IoT, cloud transformation, and so on. What is particularly exciting now with this new project?
Yeah, so I've been a Web 2 guy for longer than I've been a Web 3 guy, obviously. But once I, kind of drank the Kool-Aid, couldn't turn back. So first time I met Scott and the DLA team, the problem statement was, how do I build my business around blockchain? And we had a really good conversation about that. So what really excites me about TOKO is specifically, how do you take a very traditional enterprise, very traditional law firm, with aspirations to do something innovative, and not really fully knowing how to get there, but wanting to go along on the journey of discovering all of the changes that need to be made. So I saw it as like an amazing change management exercise, applying technology principles to it from a consulting advisory perspective, but really being able to actually look at the technology, make it right fit for business, do product market fitment as well to go to market, and then be partners with Scott and the team over at DLA. It was great.
Yeah, and exactly. Talk a little bit more about all the different services that TOKO actually offers, right? From tokenizing real assets, fractionizing them, putting them on a platform, making it available for trading. Tell us, you do everything from A to Z? Is it a full-fledged integration that you're offering?
I think this is where we started. I was interested in the use of blockchain technology. From a technology perspective, I found it very interesting, the concept of distributed ledgers. The anarchist in me, who was sitting as a partner in a global law firm with a little bit of tension around those two objectives, liked the idea of decentralization and the reliance of technology as a trust layer rather than trusted corporates. And we just, when I started on this journey going back, we'd seen financial crises and other things where there was question marks about trust. And so what we looked really to set out to do there was to create an opportunity for clients to create new products, to build new businesses, to have the support of world-leading tech plus the global law firm compliance piece. And that was actually a solution. But when I went and spoke to clients who said, I want to do this, it became very clear, I don't know how. And so it would be wrong to say we are end-to-end, because nobody in this industry is end-to-end. And so what we see is a very fragmented industry, even in the Web3 space. And it probably reflects, in some respects, the TradFi segmentations, where you have broker-dealers, you have custodians, you have advisors, you have, in the case of the Web3 stuff, the token companies and the law firms. Actually, to do one of these deals, you need all of it. And then you need virtual asset exchanges on the end. And then you need market makers. So actually, it's quite a complex consortia. So part of the journey we've done, in addition to the build, is we've been building consortiums around the world, routes to markets in different jurisdictions, so that we can have, in the context of some of the assets are regulated, some of them are not regulated. But if it's a regulated asset, you do need a digital dealer broker. You do need a virtual asset custodian. If you're aiming to put it into a secondary market, you need a virtual asset exchange. So we've been collaborating and setting up these partnerships in multiple key jurisdictions, obviously Hong Kong, Singapore, UK, US and Canada, some of the key markets, and there's others we're working on, and most recently Dubai as well. And so it's wrong to say that we offer the entire solution. If you go back to my very original business case, though, and I was still a lawyer at the time, but I can remember the phrase, it's a lawyer-led business solution we're bringing to market, which we're doing some of the key pieces of, but we're able to effectively bring the entire consortium together, so that when a client says, how do I do this? We say, well, here's how you do it. It isn't all just us, but we've actually got and tied together the whole solution for you.
And how do clients really define their problem statement or their ask? What are their expectations? Really to bring the physical world into the metaverse, or is it more about creating new types of ownership and liquidity around maybe huge assets, or maybe both? I don't know. But What is the
I'll
objective?
touch on a couple of things, and Jeff, you might have some thoughts on this as well. But one of the things for me was early days we started with how do we convince people to do this? The only time I ever use that slide is typically with the law firm partners because no one will want to do this. Actually, we have a steady stream of very significant, large-scale asset owners that are coming in saying, we do want to do this. And I haven't had to convince many people to token. I mean, if I have to sit there and convince somebody to tokenize assets, we're probably on a losing battle. What we are convincing people to do is when they realise the future of our industry is going to be digital, what we're doing is convincing them, and we're your best partner for that solution. So that's how we've positioned TOKO, and we haven't had to do much hard selling and convincing the world to tokenize. There are two pieces to this. There are those businesses or asset owners who just see the future is going to be digital, and I just want to do a deal that looks an awful lot like the original deal, but now in this digital form. And we'll worry about what happens next once it's into that digital form, whether that's the secondary market, digital exchange, whether it's DeFi or lending or collateralization. That'll come, but we just want to get it in there. But the ones that are perhaps really exciting that we're working on now, and we're starting to see some hugely novel and very different business cases where people are actually saying, well, with this technology, I can create entirely new asset classes. Underlying it might be something familiar like a piece of real estate, but it might now be a legal structure or a financing structure that frankly looks nothing like a traditional debt instrument or a traditional mortgage product. It's some sort of hybridized variation of things that people are just dreaming up. Now, this to me is really exciting because it's going to create entire new economies and participation at both the investor level and also the asset owner level that we haven't seen before. So I'm very excited about those types of projects.
I think, to what Scott said, from raising capital, project financing makes a lot of sense. But some of the clients actually, I've been seeing, there's two types. There's type like Scott said, where we just want to do the bare minimum to show that we're innovative, yeah. And then there's a second type where it's like, okay, if I digitize it today, the long-term use cases I can build off of this digitized asset are, a plethora of different use cases. So whether it's specifically in the real estate side, tying building management information into smart contracts that yield additional kind of savings on the ESG level, that's quite unique, but you have to digitize your asset first to be able to do that. Likewise, with digital identity and some of these other use cases around like intellectual property rights, paying royalties out for user-generated content, that's a whole different use case as well. But in order to start, there are some of these clients that are, they have that visionary forward thinking, saying, I'm going to digitize it, convert it to a digital container, and apply a whole bunch of different layers of additional, benefit on top of it.
Right, and I think it would be really interesting to look into some specific sectors, right? So I think you prepared a few case studies that you can talk about, both of you. I think we talked about some in the education sector, healthcare. Again, remember a lot of people are listening, so I'm not sure you can share it, but what is it?
I think we can talk about something fun. You want to talk about the beer?
You talk about the beer. You like talking about beer.
Okay, so
I'm trying here to get you a little bit out of your comfort zone.
I want to preface this in a way that this is a really interesting use case, but what we're seeing and what we've been doing with particularly some of the NFT or the retail projects or the more consumer projects is we've been learning and building flows and ideas in the context of maybe an unregulated asset, and Jeff will outline what this one was. But now we can take those ideas and principles into, well, let's apply it to $1 billion piece of commercial real estate, for example. So do you want to talk beer?
Yeah, I'll talk about beer. So our friends over in the UK, probably they've walked around a store called Asda, and on one of the shelves in the craft brewery section, you'll probably find a beer called NFT, made in collaboration with Guelo Beer and Salt Brewery. You'll find a little BCW logo on the side of it too.
Nice plug.
Yeah. So, the team working with TOKO here has not only digitized the campaign from an NFT issuance perspective, we've also done a few things. So a few tokens actually you will persist. One is the token to actually decide the next piece of artwork that would be on the face of the can. You can also decide the flavor of the beer in its next campaign. So really giving the users or the consumers ownership in ways that you couldn't offer before because it's digitized and tokenized. Another thing that's quite interesting is the concept of having a charitable donation go back as part of, if there's a foundation or an activity that, let's say, ASTA has, you can contribute a proportion of the proceeds back to a cause that is verified and validated within the charity scheme. So that's one thing. The last thing that we're working on as a phase 2 is the integration and tie-in with a protocol technology called Polygon and Decentraland to create a digital bar where people can actually, from all over the world who enjoy and love the beer, can go there and participate in governance activities related to things like choosing the next beer label and the next flavor, getting feedback. So quite an end-to-end use case here, but specifically around TOKO, the part where, I don't know if you want to talk about assurance now, is like why was...
Really?
Okay. from a law firm perspective, the fact that it was kind of a wholly owned subsidiary of DLA Piper with all of the compliance checks and balances actually built into the platform during the process of tokenization, and then specifically baking in all the rights, contractual obligations, and also economic interest into the actual campaign itself, made corporates very comfortable with doing something like this, which is very different than anything else you'll find out there.
I think that's a really important point as we move towards this transition from the digital, the crypto natives, then the NFT natives, that kind of sort of Web3 developer community that's been at the forefront of the innovation and has been fantastic to watch. But when you start having those conversations with a large corporate and inevitably the head of legal and the head of risk and the head of compliance and those kind of internal functions and control functions within the enterprises, they do need to get a level of comfort around, well, I don't understand this, is it legal, can we do this? And actually having this, the background of TOKO gives them a lot. In the case of that particular project Jeff was talking about, being able to talk to the head of legal and risk at Asda Supermarkets and say, look, we're actually a panel law firm as it happens. That was per chance. You know us, these are the legal and compliance issues around this. And they just went, oh, okay, that makes us much more comfortable. And I think that's really important to bring the enterprise on board here, because there is so much fear, uncertainty around the use of digital assets and a lot of bad press around crypto and other things.
Yeah, no, absolutely. And I think last time also we talked a little bit about some of the missing links still between the technology itself and the business model. So I don't know if you want to add a little bit on.
Last time we talked about smart contracts being not smart enough. I don't know whether you want to say the same thing again.
We also talked about unified digital identities.
There are two pieces to this that I think the technology will open up and fundamentally change. And that is, one, around the smart contracts becoming smarter, and from an asset management point of view, and by asset here I'm not talking about the traditional financial world necessarily, but if you have an asset and you're now wanting to raise funds on the back of it and have a pool of people who have given you money that you owe money back to or give them decisions. I mean, you talked about, it sounds like a trite example. We're now in the metaverse at the virtual bar having governance discussions around the future of the beer can and what it's going to look like. Okay. Sounds, cool and everything else. Actually, we're in the metaverse having a shareholders meeting because we've tokenized the equity of a company. And we're having a shareholders meeting in the metaverse and discussing the future of the company and decisions around it. Oh, now it's real. These are exactly the same flows. And that's what I mean in terms of we're using some of these examples to build the flows and build the ability to do things like governance and smart contract automation and then drive them into, more real world assets. This will bring efficiencies to bear on the administration and the management, on-chain voting, dissemination of information. The other piece that I think is going to get really interesting is the use of tokens and the use of blockchain technology to give transparency to, let's call them investors, but anyone who's buying a token. And that's what we've seen. Christy was talking earlier about NFTs aren't regulated and maybe they should be. Absolutely they should be, because what happened in in a multi-billion-dollar marketplace in the absence of regulation, we saw a little bit of fraud going on. Who'd have thought, yeah? So actually what's going to be really important in that is people are given proper information. It's the same principles we're all used to in investment around disclosure, giving people sufficient information to understand what they're buying. And we now hear about it. Oh, it turns out I spent $300,000 on a digital ape. I thought I had some rights like it was my image. No, not unless you bake that into the token. And so having information, disclosures, information about the underlying asset, having that tied to the token to create a perpetual data room, if you like. It's a data room on the primary market issuance, but it then becomes a perpetual data room which can continue to be updated as things happen with the underlying asset. And again, from a secondary market point of view, what we see is lots of assets in the world don't have secondary market liquidity because it starts with, oh, you'll need to go and spend $200,000 on lawyers building a new data room to see where it is today. But actually, if that data room is living and breathing and online, well, we don't have to do that because it's already there, it's transparent, and it's far more accurate than people running around looking for scraps of paper and companies trying to find them. So I think there's two pieces around that, and the information disclosure is really important.
I can pull it back to maybe the decentralized identity. So from a security token perspective, I think Scott talked about something very interesting. As you go through the asset tokenization lifecycle, you run through multiple different intermediaries. I mean, you're never going to get rid of them. But the problem is there's a couple limitations on the front end and the back end. On the front end, it's about, okay, so what KYC ML information are you using? Who is the UUID? Who sets the precedent? And who are you going to follow? So most of the times for interoperability issues, you have to either create a private blockchain or figure out some type of messaging solution so that all of the participants can actually talk to each other and then choose the right KYC ML data. Well, that doesn't exist today. So some of the very interesting things that even Animoca has been talking about for a large extent, decentralized identity. So once you have that kind of decentralized sovereign identity, you can actually apply it as a standard to the asset tokenization lifecycle. So that's one big thing. That's a missing link. The second thing is, from a security token perspective, it's great that you tokenize an asset. You see, the difference between like cryptocurrency is that it's wholly valued within the token itself. And then the volume and trading, whatever. But specifically with like a security token, how are you getting the valuation? You're going to tokenize like a building. How do you know the comp from what source? And how does it actually come back in to actually give you that valuation? And even if you could figure that valuation, we're talking about smart contracts, how are you going to settle it properly? I think this is the part where digital, like cash and the asset leg need to start talking together. So that's another missing piece, whether it's on the digital CSD side and how we're going to actually deal with that. And I think there's a very interesting opportunity in jurisdictions like Dubai.
Right, and same for you, right? Because actually for the layman, that's exactly the question that arises. I think it's fascinating to see when you bring lawyers into the space that there seem to be so many more questions that are actually underlying. But you mentioned the R word, the regulator, right? So talking a little bit about that aspect here, and obviously, digital assets, virtual assets are a really interesting new type of asset class. Which obviously ask about, what are different regulatory environments, and you get kind of like around the world. I mean, maybe first question, how is Hong Kong positioned in that context?
It's probably easy to get stuck into Hong Kong, and I probably will before I finish this sentence. But it's not positioned terribly in the context of global, regulatory regimes. The world is struggling with the issue of how to regulate these assets. What we have is a traditional financial system that has been fragmented into traditional buckets of what assets should be. Are they commodities? Are they securities? Are they CISs? Are they unregulated? Are they debt token? There are these traditional things, and that's been wonderful, and the world's lived in these silos. And then virtual assets came along, and the technology allowed people to get much more creative. And actually what you see, and lawyers wrestle with this all the time, what is this asset? Well, today it might be one of those. Tomorrow it might have the features of one of these. Then it's suddenly, a week later, it's one of those. These things have a habit of changing or blurring the boundaries between these TradFi kind of definitions. And that's causing a lot of, I think, unease with regulators wondering about what's my role in this new digital world. Is this going to be my asset that I regulate or not? And so we are seeing regulators around the world, and multiple regulators having sort of fiefdoms and land grabs and fights over who's, particularly the US, SEC versus CFTC, for example, who regulates a Bitcoin. There's still, every week there's a new piece of proposed law to decide where it should sit, and they still haven't worked it out, 14 years after the thing was created. So it's not that Hong Kong is uniquely poorly placed. I think the trouble for Hong Kong is we're starting to see the emergence of more holistic, and Christy talked about this earlier, more regulatory frameworks that have been designed with digital in mind. Whereas frankly in Hong Kong we've had the regulators saying the law's okay as it is. And frankly I don't think it is. If it was, where are the security token deals in Hong Kong? Because I've got clients lined up in this jurisdiction trying to do them, and they can't get them done. There are investors wanting to buy them, the security tokens. There are asset owners wanting to do them. There are people wanting the licenses to distribute these things, many of them, and yet it's not happening. So there is a responsibility that does need to reside with the, with central government, with the direction of travel, and with the regulators that haven't actually provided that clarity and the necessary regulatory oversight. I will mention Dubai, because I can't help not to. We're working very closely with VARA, the new virtual assets regulator there. What we are seeing for the first time is a single regulator that is going to regulate all virtual assets. And so we don't have to start every project with spending 100 grand on lawyers to decide, is it a security, a commodity, an unregulated NFT, a governance token, any of these things. You don't have to. Is it on a blockchain? Yeah, okay, it's regulated. If it's regulated...
Should all really virtual assets be regulated?
They will be in Dubai.
Because, arguably you could say like a bottle of wine, if you sell it, at an auction house today, it's not regulated. Now you put that into a digital form, once of a sudden becomes an asset that needs to be regulated?
It will be in Dubai. Now, is that a good thing or a bad thing? I think Christy was arguing earlier that it was a good thing. I agree. We're on the same team on this one. So we think it is a good thing. And it's not that it's a bottle of wine. I think if you went and bought a bottle of wine today, it doesn't feel like a tradable asset, like an NFT that is linked to and gives you a redemption right over there. It's the fact that once it's in digital form, this thing can be flying around the world, trading. It becomes liquid, and it's the liquidity that comes with the use of this technology, I think, does fundamentally change it from being it's just a good that I walk into a shop and buy, versus it's a right to a good that's now tradable. Because really we don't have, if I gave you a piece of paper and said, look, here's an IOU that allows you to go and get a piece of wine, a bottle of wine, that doesn't happen. But here's my NFT with a built-in redemption right over an expensive bottle of wine that you can then trade. Now it is fundamentally different. So my view is it should be regulated, and what will happen then is those marketplaces can actually evolve in a way that's more transparent, that's more required to worry about things like investor protections.
Yeah, and I actually interrupted you because I think you were getting also a little bit about what are the objectives of a regulator. So what are kind of like the three key areas that a regulator actually, particularly in that new digital asset world, should have in mind?
I'm going to compare and contrast Hong Kong and Dubai here, for example. So the common objectives of all regulators in this space is obviously investor or consumer protection, and none would differ from that. I think the problem for Hong Kong, for example, is that is their only worry. And no consumer will ever be harmed if I never let the market get going at all. So that's safe. And so it's a very safe course of action to just not let anyone do anything. And I think that's where we are. Not just in Hong Kong, but certainly in Hong Kong, there is an element of paralysis around this. What we're seeing with the regulator in Dubai is a more fundamental shift where they're saying, yes, of course, we have to have investor protections, that's fundamental, but we're also very keen on making sure we have an ecosystem that, one, fosters innovation, and fosters innovation in terms of the potential that innovation can have in terms of job creation, wealth creation, financial inclusion and democratisation of financial inclusion, which is a really important point. And in the world today, most people are not financially included. Retail investors in Hong Kong can't buy a piece of a house. Equally, they can't buy a whole house here because they can't afford it. So they're now being locked out of the markets. That doesn't feel fair to me. But the regulators there are also very clear that they are trying to create a new global virtual assets hub for the world. One of, not the only one, but one of. When I have conversations with regulators here, I don't get that same message. It's consumer protection, investor protection, worry, risk, cyber, and these are all legitimate concerns, but there isn't much balance to the opportunity side of the equation, and that's what we're seeing very different in the Middle East.
That is super interesting, and I actually see that, unfortunately, we're really running out of time, but typically I have the crystal ball question for you at the end, but maybe we transform that in like a last call to action or something you really want to make sure everybody in the audience hears?
Oh man, I gotta go first this time.
He wants to beat you this time, that's just... he wants to make sure he has the final word.
On the last word.
call to action is really for the Web 2 companies waiting to go Web 3. Don't wait, just do it.
Yeah, and for me, it's let the creative juices run wild here. Like, there is an opportunity for you to, within whatever business you're doing, to adopt this technology in a way that can create new revenue streams, new consumer engagement models, and new value for your business. And that's what we know. That's our strapline at TOKO, is empowering value creation. Sure, we want to be successful as well, but we are so excited when we're talking to some of these clients that are now just building these brand new models and going, the world's never seen one of those, and we can help you with our unique combination of world's best tech plus legal compliance to help you make that a reality, and that's super exciting.
Beautiful. We'll end it here. Thank you so much. Scott, Jeff, big hand of applause.
Thank you.